Prices are cracking under pressure. If we take a look, price cuts on new construction mount as home builder sentiment remains low. Now, today I had a closing where we bought a condo about $20,000 plus below what people were paying in the spring, showing you that that market swing, that market shift has happened, and it is now becoming a buyer's market. I do have some data after Thanksgiving. I can't share it just yet, but I do have data I want to show you. I'm going to show you something that's going to blow your socks off, showing you how the market has changed and how much pressure sellers are feeling. I just can't show that quite yet. It has to be after Thanksgiving, and I will definitely show that. So make sure you subscribe and hit that like button because you're going to want to stay tuned to that. Now, we're seeing that these price cuts on new construction mount. A big kicker that I've been talking about is the car industry, resembling the 2008, 2009 housing bubble with these subprime loans of 140% loan to value ratios, and cars are not an appreciating asset. But that's how they were being treated during the pandemic. And I'm going to get to showing you some more data on housing. Check this out. Vehicle repossessions surging at pace on par with the Great Recession. Now you keep hearing the worst since the Great Recession, on par with the Great Recession, dot-com bubble. We're having resemblances to everything in the last 100 years, from the Great Depression to the Great Recession and to the booms that we saw in the 70s, all the booms and busts we have had here in the last 5 years. Now the question is, are they going to keep kicking that can down the road? And will they be able to? Well, remember that job cuts in October hit the highest level in the month in 22 years. Now, the government data should be releasing their non-farm payroll on Thursday, and there's anticipation that that won't be so great. And right here, we're seeing that the 10-year Treasury inches lower as as investors anticipate delayed economic data. And right here, I was reading through the 10-year Treasury and the Fed. There's a lot of people in the Fed saying we really need to cut rates regardless of what the non-farm payroll says here on the Thursday when it's dropped this week, once they report that to us. And they're not going to report unemployment. That's something that seems they're going to be brushing under the rug. And of course, we have the 50-year mortgage, which I don't think is going to pass. There's a lot going on with that. It just doesn't make any financial sense. I don't think the banks are going to want the risk, and the amount of money that it saves on a monthly payment, it doesn't really, it's not really that much. So, and also Trump has gotten a lot of backlash for that. So I don't think that is going to actually pass. Now, if you take a look, this is the active listings. This blue purple line at the top is this year. So you're seeing that it is much elevated over the years past here. And if you take a look here toward the end, you see that it is on its way downward, which is following the trends of coming down here as the holiday and winter season months start coming along. And then we see that the under contracts have also started coming down. They were actually negative in October. Now they seem to be about on par in November to what they were last year. And if we're having under contracts that are not coming up, we know that the sold data won't. So this inventory is going to stay elevated. Now, there's a sold data showing that it was a little bit less at the beginning of the year, equal throughout majority of the spring. And then in the summer, the blue purple line at the top for this year was higher, and now it is trending back to being equal. So are we going to see the spike? We see that inventory these last years, and it's pretty much the trend every year other than 2025. You see that inventory continues coming down, stays flat until March, and then it starts ticking back up. Well, last year we started ticking back up right away at the beginning of the year, right after New Year. Now, if you haven't, smash the like button, hit the subscribe button. I'm actually going to share something here with you with new construction, showing you how bad it is actually out there, that builders are not really that confident. And I've been able to lock in some really, really good deals for buyers here in the last couple of weeks, maybe the last 30 days or so. And I've been saying, wait until the end of the year. You're going to be getting much better deals than people that have been buying in the spring and the beginning of summer. Now, the recession could be knocking on the door. And if that comes, well, you know how I feel about it. They keep delaying it. They're not allowing capitalism to be in play. We don't need 50-year mortgages. We just need the true free market. Stop with the bailouts and let things reset once they're supposed to. That's capitalism. Simple as that. Now, if we go back over here these price cuts on the new construction, and we see that the sentiment is low amongst these home builders. Now, this is very, very key because home builders see where the market's going, and right now, the confidence of builders is the lowest that we've had since 2022. And remember, in the second half of 2022, we saw prices nationwide drop 10%. And here in our local Utah housing market, we saw it drop about 15%. Now, the condo that we just closed on today, that condo we got for about 7% less than what the buyers were paying in March. And also, some of them were cash, and yet we still got the better deal. So it shows that the data remains true there. Now, I want to scroll down here and share some stuff with you guys about this article that I found interesting, and I'll kind of give you my inputs. So right here, the share of home builders offering price cuts on newly built homes reached a new 5-year high in November. Right there, a new 5-year high in November. And this year, I was saying that the data is indicating we are heading toward a builder confidence rating of less, most likely, than what we had in the second half of 2022, because even in the summer months, they were already trending to the lows that we saw in December of 2022 and that November of 2023. And so here we are, a 5-year high. Now, this month, 41% of builders reported cutting prices, a record high post-COVID period. Now, again, that is higher than we saw in 2022, but yet prices are not dropping to the same levels that they did in the second half of 22. And that's because people are saying, I've been through this rodeo, the government's going to keep pumping money out, the government's going to keep bailing everybody out, and I'm going to just hold on to my house. Everything's getting more expensive. I'll just wait until next year. And that's why we need these recessions. That's why capitalism, a free market, is the best market, and you're supposed to let it run its course, which they're not. But it seems that they could potentially be running out of time because we're seeing that these vehicle repossessions right here, more than 2.2 million vehicles have already been repossessed this year, a number expected to climb to 3 million by the end of 2025, in line with the Great Recession. And the job cuts, the highest in 2020, in 22 years. And then back here to the National Association of Home Builders and the market index. So the average price reduction reported by builders was 6% in November, the same rate as the previous month. So those are some pretty good price cuts that these builders are doing. And builders are usually adding upgrades, they're usually adding other incentives. So you're seeing, and that's why new construction is moving, is because the builders are incentivizing while the sellers of existing homes are just, well, hoping that things are just going to get better. That is a word that I've been hearing a lot among sellers. Well, I'm going to have hope. Well, I think things are going to turn around. Well, I'll wait until next year. And if everybody has kind of the same basis of these sellers, well, if that recession comes, it's going to be a rude awakening. We're going to have a dump of inventory. And right here, 65% of builders reported using other sale incentives, such as rate buy downs in November, tying the share in September and October. So not only are price cuts happening at a much higher pace, they're still offering those incentives, those 2.9% interest rates, 3.9% interest rates, saying, hey, you get a 4.9 fixed interest rate and we'll buy it down 2.9 and 3.9 for the first 2 years. So you're seeing all of these incentives. And with this inventory over here staying elevated, that's going to be key for us to keep in mind. So if you haven't yet, smash that like button. Give me a call, set up a free consultation, see if we're a good fit for one another, and I will make sure to get you the best deal, just like I have been for the buyers here in recent weeks. And we're able to take advantage of this housing market. Now, if you want to wait for the recession, go for it. Do that. I'm going to be here for years and years to come. And I'm going to keep sharing these videos, keep sharing this information. And if you're in the market now, let's take advantage of it. Let's make sure you get the best deal.